This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. I'm Scott Norse here with your Forex Report. Today is Wednesday, August 8th, 2007. The number of reasons for investors to sell the dollar seems to be growing every week, and finding a reason to buy the buck seems like finding a needle in a haystack. At the risk of sounding doom and gloom, we simply cannot come up with compelling reasons for investors to park cash in the U.S. right now. The most recent blow to the greenback came in the form of threats from China, not military threats, but financial. One of the world's largest holders of U.S. debt, China has announced its plan to dump its holdings of treasuries and other dollar-denominated assets if Congress follows through with proposed tariffs on Chinese imports. This would lead to a big drop in the greenback's value, while sending interest rates soaring in the midst of a housing recession. Any way you slice it, that's very bad news for the U.S. economy and something that isn't sitting well with traders in the Forex market. The dollar weakened in the broad market today, losing the most ground against the European currencies, as both the ECB and BOE have recently cemented rate hikes before the end of this year. In contrast, the Fed yesterday took another small step away from its tightening bias as it recognized additional risk to growth in the second half of this year. Meanwhile, the RBA hiked rates again last night to an 11-year high and may have more room, according to some economists. Several other central banks are also still in the midst of tightening cycles. This leaves the dollar in a very vulnerable state as we head into the final 48 hours of trading for this week. We have limited economic data ahead of us as well, which means there's little room for the dollar's story to improve. We urge caution to any traders looking to buy the greenback, even in the near term. The yen also looks very vulnerable, as carry trades have been on fire today, and we only expect this move to reverse if stocks plunge in the days ahead. Till tomorrow, have a wonderful night trading. Take care.